Hello, and thank you for joining us. I'm Angela Ost, Director of Plan Giving here at Cornerstone Advisors Asset Management, and I am joined by Avery Coleman, who is Cornerstone's Plan Giving Investment Analyst. Hi, Avery, how are you?
Hola, pretty great today.
Excellent. So we are back and ready to talk with you all about another topic that we get questions about quite frequently, and that is investments within a charitable gift annuity pool. So today, Avery is going to be our expert, and he is going to respond to a bunch of questions that we get asked all the time on this topic. So with that, Avery, are you ready?
Absolutely.
Perfect. So let's get started with the basics, Avery. Generally speaking, how does Cornerstone determine the asset allocation of a charitable gift annuity pool? Do we look at this differently than we would other assets that we manage?
Well, first we'll start off like we often do with the obligatory. We don't offer tax or legal advice. Make sure you always talk to lawyer, accountant, whoever specializes in that. But to get to your question, there is a difference in the asset allocation between equity targets and their fixed income targets for endowments versus a CGA pool. Um, Endowments, they should last in perpetuity forever. So we would manage them a little more aggressively. You can take some losses in exchange for higher return over a long period of time. For a CGA pool, we need to make sure the payments are there for the donations and stuff like that, for any reserve requirements that you might have. So it'll be a little more conservative.
Okay, that makes sense. Now, is there anything as far as state specifics with a charitable gift annuity pool that we would look at that a little bit differently?
Some states do have requirements where you have to have a certain amount in a certain number of different assets or asset classes. It'll change that your allocation has to be a specific percentage to fixed income, or you might not be allowed to own one specific fixed income instrument or something like that. It depends on a state by state basis. So just something to look out for. Also something that we talk about and agree upon with organizations before we start. So it's something that's really marked out from the beginning.
Okay, perfect. What type of funds do we look to include in our asset allocation for a CGA pool?
Lots of broad market, industry wide, really inexpensive ETF type funds. Sometimes we'll go active, sometimes we'll have some mutual funds, but really we want to be as efficient as possible cost wise. So when we're looking for investments to include in the pool, it's going to be something that, an S&P 500 type fund that invests in the entire market and is very cheap to invest in. So you're not going to have a bunch of expenses.
Okay, that makes sense. And when you talk about the equity allocation that we are managing the pool towards, are we basing that off of the age of the donors, or how do we decide what equity target we have?
Well, generally, we would not have any kind of management based on the age of the donor. It's going to be based on the pool. As I talked about earlier, when we talked about the endowment, managing endowments versus CGAs, you manage it to the type of portfolio it is, which is a CGA portfolio. And that money has to last for a certain period of time so that you can make all your payments to all your donors. And so we're not going to be, any one donor is not going to really shift the makeup of the overall allocation. And it's something that we'll really talk to the organization with beforehand so that everybody's on the same page as far as what the risk allocation is going to be, the equity and the fixed income portions of the portfolio. So it's something that really is agreed upon mostly by the organization more so than any specific donor preference.
Okay, and that actually takes me to my last question then. Are there types of policies or documents in place that we follow or have in place with the organization?
Yeah, the document that is probably one of the most important is your investment policy statement, aka IPS, or investment strategy statement. There are some different names for it, but essentially what it is a guidebook agreed upon between the organization and Cornerstone that says this is where we would like to be as far as how much risk we would like to take in our portfolio. These are the types of funds that we are looking into. Here's how it abides by the state laws, whatever specific state laws there may or may not be. And that agreement is really what drives the portfolio management that we look at. We look at, hey, what do we agree on at the beginning? And then we review annually, sometimes more frequently. We'll go over, do we still want this same mixture? And that document can change if we want to, as often as we'd like, but really it's ideally low, less often. You don't really want to be switching investments crazy. That's going to add some cost, and we're trying to be as low cost as possible. But really, that document of the strategy statement, the investment policy statement, is what drives us to our management allocations.
Excellent. Well, thank you, Avery. This has been extremely helpful. You have answered many questions that we get asked all of the time. Thank you to all of the viewers for taking a moment to listen to this video, and we look forward to coming back with another video shortly. Thank you all.